Frida, I think I met a man of my life. He's so nice, gentle, caring, and he keeps lights on entire night. Hello everyone and welcome back. My name is Dan, and in today's video I will be teaching you how to keep a proper risk and money management in order to be successful in trading. Proper risk and money management is one of the most important things in trading. So if you want to be a profitable trader, this is the number one thing that you need to keep in check. So what is risk and money management? Well, risk and money management is basically a set of rules that you will be using to manage your money. And there is no successful trader in the business who is profitable long enough without proper risk and money management. Day trading, as I've mentioned already many times, is the riskiest form of trading out there. And the reason why statistics is against you and why the odds are against you is because most of the people, or let's say 90% of the people who are not profitable day traders, are actually losing money because they do not follow very strict and detailed money management. And it's as simple as that. You need to have your strategy, and once your strategy is proven to work, once your strategy is good enough and rehearsed enough in a long period of time, okay? Because some strategies, they can work for a month, and that doesn't mean that it's gonna work for you like an entire year or more, 5 years or 10 years. But once you have a proper strategy that actually works and that is back-tested enough, then you need to keep a tight risk and money management in order to make profits as big as possible and to keep you always in surplus with minimum losses. There are three phases that every single trader goes through. The first phase is the greed phase, okay? And in the greed phase, every single trader, they start trading. They get lucky maybe a bit. Let's say people who started in a bull run of 2020, they were super lucky. Whatever you press buy on, you were literally in profit the whole year, and even 2021, right? So you were lucky and you're just buying things and you were thinking, oh my God, I'm so good at this. This is brilliant. This is super easy, right? But in reality, they were just lucky because we were in a bull run and they were just pressing the buy button in a good time. Once you see and realize that you're actually making money from just pressing randomly buttons without doing any much of work or analysis or background work, you think to yourself, I think this is pretty easy. I don't know why people are saying that everybody's losing money on this. This is super easy. You don't need a lot of effort to do this business. And then they become greedy. They started investing more and more money. And some people go as far as investing even the money they don't have, meaning they borrow money from other people, or they take out their life savings just to put it in the stock market because they feel so confident and greedy. They want to make money overnight, become multi-millionaires overnight, and just get financial freedom. However, it is not as easy as that, because obviously, just think about it logically. If it was easy as that, everyone would be just trading and everybody would be multi-millionaire, billionaires, whatever, and everybody would be financially free. Then the second phase is phase of fear. You start losing money on some stupid random trade that you placed, that you didn't even do any analysis, as I've said, and then you start losing money and you're like, why am I losing money? This is awkward, right? The market starts turning or pivoting, okay, and we start entering slowly into a bear market, and all of a sudden your buy tactic doesn't work anymore, right? And you start losing a lot of money, and then you feel fear and you start revenge trading. You start increasing your number of shares traded, number of contracts traded. You just want to get your money back because you lost whatever you earned rightfully, right? This is how your brain reacts. You want to get that money back because it's yours, okay? And you enter a stage of fear because all of a sudden, oh my God, this tactic is not working anymore. And you panic, you don't know what to do, right? So this is the second stage. And the third and the last stage that every single trader goes through is stage of successful risk and money management. In this stage is where this 10% or less people are actually made, is when you realize that your strategy isn't working, that your only buy strategy isn't working anymore, and that you need a proper risk and money management. And that is where you start developing your strategies even better, keeping a very tight stop losses and keeping your profits as high as possible, and let your winners run. In that phase, you learn the market, how it moves, how it reacts, and obviously the traders who are in this phase already have a couple of years of experience behind them, and they've learned how to navigate a bull market and how to navigate a bear market, and they found a golden middle, and now they are ready and they know exactly what their strategy is and how will they perform. successful risk and money management also means leaving money on the table. A lot of the people are actually not ready for this, but you will always leave some money on the table. You can never guess tops and you can never guess bottoms. And that is why I've talked about performing well rather than making money, which is extremely important, right? You want to perform well. You want to do good always, all the time, every single day, or at least to the best of your abilities. You will not always perform well, right? But as long as you try and give your 100%, that's good enough. Now, the important thing comes when you realize that you're not performing well in the markets on that particular day or week. You need to know when to call it quits. You need to know when to stop, because if you don't stop, that is where you go into abyss, and that is where you make these huge losses from which you cannot recover easily, right? We all been there, we all done that. You made a certain amount of money and then just to give it away all in one trade, and then you get so frustrated, so angry. And this is what the proper risk and management is all about. If you ever seen some videos or educated yourself about institutional trading, you'll see that they have extremely well established risk and money management procedures. And they even have risk and money managers who are making sure that risk and money management is always followed strictly 100% all of the time. So let's recap. You have 3 stages that every trader goes through. That is greed, where you become greedy after your first few winners. That is fear, where you become fearful because you lost all your gains that you made in the first round. And then you have a proper risk and money management, which is where you establish your systems and how do you follow that system and execute it in the best way to stay profitable long enough. Now, let me share with you a few simple rules to follow with risk and money management. Some of the simple rules that I personally follow and many other traders is, for example, risk to return ratio high enough to bring you profitability in the long run. Personally, I try to use 1 to 3 risk to return ratio all the time. However, it's not the case 100% of the times, because of course the market is if the market was black and white all the time and if you could read it easily, everybody would be making lots of money. But I really do try to keep my return to risk 3 to 1 all the times, and it actually helps you when you're doing later on statistics and analyzing your gains. You will see that this is the thing that actually helped you become profitable and helped you stay profitable. So let's move on to the PC just to show you how does it look like on an example. Okay, so over here we have a Nasdaq chart, right? And let's say I want to buy just right here, okay? I want to open a position on Nasdaq right over here. I am willing to risk 20 points in order to get 60 points, all right? So this is how it looks like. Basically, this is simple 3 to 1 risk to return ratio. You see over here it says 20 points stop loss and target is 60 points. As I've said, I'm calculating my gains in points, not in dollars, because it's easier for me that way. However, just imagine you're risking $20 to gain 60, 3 to 1, right? So simple enough. Let's say, okay, you did this trade, right? And you got stopped out over here with a take profit. So you made 60 bucks, $60, let's say $60, okay? That means that now you can do 3 losing trades and you will break even. You will not, because you'll have to pay commissions for every single trade that you're executing. So you will be just in a slight minus if you actually lose the next 3 trades, which is amazing, right? So if you have 2 winners of 60 points, you can lose next 12 trades with 20 points and you will still be in a small minus because you will be paying for commissions. Now, if your risk to return is even higher, let's say 5 to 1, 6 to 1, 7 to 1, 12 to 1, this is even better, right? It gives you more space to make mistakes. It is literally about creating space for mistakes, right? So all you need is one good trade in order to give you more room and to take some riskier setups, riskier trades, right? Even though you should be following your systems 100%, but let's say you just want to give it a go on certain setups that are not 100%, but you want to try, you still have room to make mistakes, right? If you did 7 to 1 risk to return, you have room to make 1 or 2 mistakes, 1 or 2 bad trades. That is okay. But if you do the other way around, let's go back to the PC. If you risk, for example, 50 points just to get 20 points. This is the problem, right? So you're risking 50 points or $50 just to make 20, or you're risking $20 to make 20. It makes not much of a sense, right? I'm not saying that it doesn't make sense at all. Sometimes it does. However, I would not recommend it, especially to beginners, because losing more money, risking more money than you're actually about to win is never good, and it will not keep you profitable in the long run 100%. Okay, so as I've said, try to keep your stop loss and risk to return as high as possible. 3-to-1, keep it as a minimum, because that is the best ratio where you can allow yourself room for mistakes and where you can compensate. Let's say you made 3 bad trades, with only 2 good trades you can just make it all up and then some. So my personal preference and choice is always 3-to-1 if it's possible. If not, you can still do 2-to-1, okay, and be profitable. However, your win rate needs to be above 50%, okay? And that is just not good enough for most of the people, because we don't have the tools and we don't have the resources that big companies have, and we cannot make as many mistakes as they can, right? So you need to have a profitable strategy with as less percentage of win rate as possible. So that's why with the 3-to-1, you only actually need around, let's say, 40% to be profitable in the long run. Your win rate needs to be only about 40%, right? So it's not that crazy. It's very achievable. It's very achievable. However, you need to have a good strategy, good understanding of the markets, etc., etc. The next simple rule that a lot of the people or institutions are following is not risking more than 1% of your trading deposit on a single trade. This rule is a very good rule because it limits you to only 1% of your trading deposit, and you will not wipe your account very fast. And if you do, that means that you literally did 100 trades in a row which were unsuccessful, and something is lacking with your strategy. So then you have to question yourself, if I did 50 trades that were bad and I lost 50% of my account by just risking 1% on any single trade, my strategy is seriously lacking, right? So I need to work on that. I need to change something. I need to approach market differently, look some other trades to backtest them, and so on. Some people even use 0.5% of the trading deposit on every single trade. However, most of the beginners actually start very small with very small accounts, and 0.5% you'll probably get stopped out a lot, okay? But I would recommend you for a beginning using 1% of your trading deposit as a stop loss. So to sum it up, basically, you need to have your strategy that is backtested and that is proven to work, and you need to have a strict and risk and money management. Risk and money management should be 1-to-3 risk to return ratio minimum. You can use 2-to-1 as I've said, but then your strategy needs to be really, really good. The more return on your risk, the better, of course. And every single trade should not exceed 1% of your trading deposit. Of course, you can use whatever you want. You can do any strategy that you like, and you can experiment, right? However, these are some unwritten rules that are set by way more experienced traders in the business, and they've been long enough to know what actually works in the long run and what doesn't work in the long run. So yeah, I would suggest you to follow them and listen to more experienced people, right, who've been there and actually made money in this field, and try to keep your stop losses as tight as possible and your winners as high as possible. Once you master it, you'll be making money in no time, and you'll be going to that Lambo shop to get a new car for yourself, right? Or you'll simply be able to keep the lights on the whole night and keep that electricity bill as high as possible. All jokes aside, I hope you enjoyed this lesson, and I hope that you understand what it takes to be successful in the long run, and I hope that you already started looking and analyzing your losses and see how much percent of your trading deposit are you losing on every single trade. And I guarantee you, once you start looking into that, you will realize that you were way off, that you're losing way more money than you should. And once you start implementing it, magic happens. Thank you so much for watching this video. Click the thumbs up, subscribe to the channel to stay tuned for more new informative videos, and I'll see you in the next one.